Hello. Oops, sorry, didn't mean to do that. Hello. Hi all, and welcome to another edition of TraderCast YouTube Live. My name is Phil, I'll be your presenter. Today we'll be talking about some live trades and also key trading levels. A little bit about me. I am running a community of traders at TraderCast.com. So if you're looking for like-minded people, if you're looking for a detailed explanation on market trends, key trading levels, trading setups, come and join us at TraderCast. Come and see what we are doing. If you are a little bit confused with what I'm doing today and you think that you would like to learn more, you can find my courses at My Trading Skills. I've had the privilege of talking in front of thousands of people over the past 10 years and had the privilege of teaching some of them how to trade. Some were brand new people, some were people who traded already and needed help with a specific area of their trading activity, like maybe a risk management or psychology. A big disclaimer, anything I say here today are my own opinions and experiences. This is not advice. I do not have indication of your personal trading and investment objectives. So therefore this is only a practical application of what I think you should be able to do if you go through our courses. So basically a hands-on experience on how to use what we are teaching in My Trading Skills courses. Now, I have a few positions open. I will be closing some of them very quickly because today is going to be a volatile day, especially in several hours when the US markets open. But I'm currently long Nasdaq from 15,798. I'm long WTI crude from 64.42. There is only a small position left there. I'm long S&P from 46.20. Also long Aussie dollar at 71.28. And apologies for this should be red. I'm I'm bearish short euro dollar at 112.82. And I'm also short euro Aussie at 158.50. And yet again, this is due to a significant event that will happen tomorrow, and it might trigger volatility across euro currency crosses. I'll talk about it, all of this in more detail. Now let me just show you what I'm looking at. There are three things that I'm looking at the moment, apart from these positions that I currently have open. I'm looking at FTSE as a really good long setup, and the levels are still the same. Yesterday I was looking at the same level. 71.60 is the level of interest for me in FTSE. I would like to see a pullback to that level and then possibly a reversal from there. If that happens, yet again, this volatility could be triggered by something that might happen tomorrow midday UK time. If you're not familiar with all of that, I would love to explain more why and what's the exact timing, and we do that in TraderCast on daily basis. Now, if I do decide to go long at 71.60, I would likely put my stop loss down here at 71.90. So it's about 60, 70 points of risk. It depends on how I get in, what is the trigger, where do I get filled, and so on and so on. So but roughly I would like to put my stop loss around 70.90. And if that happens, I would like to see a rally to the upside, targeting resistances. So partial profit taking at 7,300, possibly 73.60, and then 73.90 or 7,400. So number of areas where I would like to take profit, and move my stop loss closer to entry, at entry, above entry, and so on. For those of you who've seen some of the other live events, you know what I'm talking about, but that would be a position management setup there. The other thing that I am actively looking at is dollar CAD. Dollar CAD will likely experience severe volatility today as well. The level that I'm keeping an eye on is at 1.28. This area here, I'm looking for a possible pullback to that level, something like this happening, pullback to this area, and then a big reversal from there to the upside. 128, I would like to see a confirmation to get in the shape of the candle. Stop would be down here at 127.40, so about 60 points of risk for a potential spike higher towards 29.50, maybe even one spot 29.70 or higher. So it could be 2-to-1 risk to reward ratio. Yet again, dollar cards, keeping an eye on it. Key trading level for me 128, looking to see if I get a pullback, and then I would decide if I could get long at that level. The last thing that I had kind of set up here, and this is a little bit kind of contrarian, I was looking for a short sell here in DAX, and the level that I was looking at is at 15,500. For those of you who've seen these events before, you know I was bullish DAX earlier, and that was reversed, and now the fact that price is making lower low and it's losing this rising support trend line, and now it's retesting this from underneath as a newly found resistance. I'm explaining probably too much why would I do this, but the level is 15,500. I would be looking to potentially enter short there, and if I do so, my stop would be up here at 15,540. That's about 40 points of risk. If that happens, I would like to see a dip to the downside, extension to the downside towards these clusters of the lows, and in that case my take profit would be at 15,420, possibly even 15,440, 15,420, 15,400 to the downside. So it could be up to 100 points of potential gain for up to 40 points of risk. 2-to-1, 2.5-to-1 would be acceptable, but that's where I am. So it does appear to be pointing to some resistance around 15,500. Yet again, that volatility could be triggered by what might happen tomorrow with a European Central Bank. I'm currently I currently have few positions open. So the first one that I was telling you about is Nasdaq. So let me just show you where I am with that. This is that Nasdaq trade here. If you remember yesterday, I was looking for a pullback. This is the setup here, 15,580. The dip down here, 15,800. Dip here. Look, there is a big wick here. There's a little bit of a buying pressure. Nice bullish engulfing here, a reversal, and now we're creating this kind of holding pattern into the FOMC, which will happen tonight, and that will trigger a serious amount of volatility. This is a major level of interest. 61.8 fib from this swing low down here to this swing high. We also have a previous resistance now tested as a newly found support. So key trading levels down here, and the reasons why I decided to go long, and I will close this long very quickly, probably before the FOMC. I'll wait and see the reaction ahead of the open or at the open, and then I will decide what to do. But I will actively manage this very aggressively and get out of this position probably before tonight's Fed and FOMC press conference. So that's where we are at the moment. This is the trade. Here my stop is below. So what I would like to do now is I would like to move my stop at break even. And I also have I also have 10 contracts running here. What I'll do is I'll take partial profits on this trade. Really happy to do that. Here we go. I'm taking half of the money off. I don't have a limit order because I think that if this breaks to the upside, there'll be a clear run towards 16,100, 16,200 and even higher. So I want to have some money in, but I want to have my stop at break even just in a case if anything happens. If I see a big selling pressure at the open, I might close my position at 15,850 manually. I just get out before my stop is hit, and I would be happy with that setup as well. I'm also long S&P. This is S&P. For those of you who don't know what the S&P is, S&P 500 is a big equity index. I was looking at this area down here, 46, 30. Apologies, my mouth is working faster than my brain. 46.30. These lows down here are significantly important. 46.10. Resistance on the upside, 46.73, 4,747.30. So yet again, the same or very similar setup here. Sell off, sell off, sell off. 3 red candles, indecision with this doji, followed by a green candle, bullish engulfing, or a morning star reversal, if you want to call it like that. And if you don't know what I'm talking about, don't worry, it's not a rocket science. You can find out more in our courses. If I'm not your cup of tea, go and find somebody else. But go and find somebody else who can teach you, or at least give you the information that you need in order to start trading in a structured way and follow the strategies that you back tested. And you have some proof of concept there, and an audit trail of what the outcomes were when you traded and what happened subsequently. But this looks like an oversold bounce back. This type of patterns, they have the tendency to break to the upside. They tend to do it like this: breakout, retest, and a push higher. So this is where I would like to take profit, and the stop is down here. So let me just show you where that position is very quickly. Yet again, I will do a very similar thing here as well. I will likely take partial profits here because I was looking at this as a resistance. There is a little bit of a selling pressure now. So what I'm doing here is this is my S&P position. This is my S&P position. I will likely close this position ahead of the FOMC. This is where I got in this first bounce. So the first thing that I want to do now is I want to move the stop loss at break even or slightly above. So let's lock in about 5 points on this trade. Let's lock in 5 points on this trade. And I will be taking partial profits as well. So I'll take partial profits on this trade, taking some money off the table just to protect myself. And the ultimate limit order is up here. So 46.65, that'll be a good one. Then above that, this area up here would definitely be of interest, 46.80, and then 4,700 on the upside. So really happy with that. I will be taking partial profits if I see hit of this level here and then a breakout to the upside. Quite happy with this as well. Okay, the other thing that I was talking about is crude oil. Nothing really changed with crude oil. The fact that I took partial profits yesterday is really happy. It's making me feel comfortable because what happened is, if you remember, I was looking for a breakout of 73. I was looking for a breakout of this area here for the continuation to the upside. And it didn't happen, so the price actually started dipping lower and closed below 70. So my stop loss, my ultimate stop loss, is at 69. It's still there. I only have a small 1/10 of my position open on this trade as before. I'll show you all of that straight away. It's only a very small position now, but I took 3 partial profits out of that trade already. And I'm happy with the last one that I did yesterday because it was at a logical level. So 70, loss of 70, it's concerning. we see the end of day close below 70, that could potentially open the way for deeper corrective pullback. This is a 15-minute time frame for crude. This is my stop at 69. Let me just change the time frame and then I'll show you the trade. So the trade was down here at 64.40. Partial profits here, and then partial profits here yesterday, and now we're just sitting next to this level. I would love to buy oil, but above at the breakout of 72.10 or 73 for a push higher. Loss of this area here, this is where my stop is, 69. I would walk away and say, thank you, Mr. Market. I'm happy with this trade, and then look for another setup. Now, that's crude oil. The last thing that I want to talk about, well, the last thing, I think I have a couple of more positions open. I have short euro dollar. I don't have anything gold, for those of you who are wondering. The magic level for me for gold is at 17.75. The fact that we are below that level, I'm not touching it until I get some sort of reversal. The other thing that I have open is euro dollar short, and this is the reason why. Downtrending market, a loss of support, a retest from underneath. 112.80 would be a good level. Stop at 113 on the upside, thereabout for another leg to the downside. 112.40, 112.20, possibly even 112. So all of this is posted in the community since yesterday, and I've decided to go short here. So let me just show you that trade as well. It's not a huge trade in size, because we have Fed tonight, and then obviously this is a US dollar cross, and there is likelihood that we will see a severe volatility. So this is where I entered short. This is my stop up here, 113.30, and then I'm looking for a push lower. So basically Fed comes in and becomes hawkish and says we'll be hiking rates. That's bullish for dollar. Dollar rallies, euro dollar sells off. That's the logic behind it. Currently in the profit, it's a small position. I would likely be leaving it as it is, and I just want to see if I get nice flush lower. If I'm wrong, I'll be stopped out. The only thing that I might do, I might see the initial reaction and then move my stop loss closer to entry or entry if I get a chance. If I get a whipsawed, I'm whipsawed, and I'm risking 45 points in this trade. 45 points in this trade, but currently happy to stay in it. Now the other thing that I also have open, I have a Euro Aussie short. So now, yet again, this is preempting European Central Bank tomorrow, and I am, here we go. The Euro Aussie setup played out quite nicely. It's a textbook setup here. This was the entry, so this is the hourly time frame. This is the entry. Sorry, this is what I meant to do. Low, higher low, higher low, higher low. So loss of this and then a retest. So this was a red candle here. I was really happy with that one, and then there was a little bit of a reversal, and then all of this happened. So my initial stop is up here. I'm in the money on this trade. What I'll do now is I will move the stop loss below entry, looking to lock in some profits there. The limit order is down here at 157.20. Let's go about 157.20. Okay, so not too far away from a limit order. We could see a gradual move higher to 158 and then another leg lower. That's possible, but that's where I am. So currently stop below entry. I didn't take any partial profits on this because I think that potentially I could see a little bit more. This is what I would like to take profit, 157.20. The last thing that I want to show you is Aussie. I am also long Aussie dollar, and this is quite speculative ahead of the FOMC. Now we have Australian unemployment coming up on Thursday, and that would be a trigger for Australian dollar crosses. But tonight we have Fed, US dollar crosses will have a significant volatility. So that's why I was looking at dollar CAD at the beginning, if you remember. So this is my setup on Aussie dollar. I'm long Aussie dollar. Okay, my stop was initially down here. So what I'll do is I'll move the stop loss closer to my entry, about 12 points. Let's say I'm risking 12 points in this trade, and I would like to put my limit order towards 72 on the upside. 71.80 would be a good area for a profit taking. Otherwise 72 might come in play as well. Anything above that, possibly even higher, because then you have these previous lows here and here towards 72.80 or 73 as a potential take profit area. So let me just be precise. So these lows and then this high. So support, resistance, 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 resistance. So this is the area as well of interest, 72.80 or 73. So I could possibly be doing some partial profit taking, but I will be very, very cautious, very, very cautious ahead of the FOMC. So we have a high, a lower high, lower high, lower high, lower high, lower high, lower high, breakout, trend reversal, double top here, attempted to go lower, a retest of the previous resistances and newly found support, nice bullish reversal here, and off we go higher. So that's the logic behind it. Nothing magical, nothing complicated, and that's where we are. Okay, so didn't mean to do that. My mouse is extra sticky today and I have no idea why. So guys, that's me for today. I didn't see any of your questions. Hopefully I'll see some of you in the community as well. Stay safe, happy trading. Bye for now and talk to you all soon.